All right, I'm with David Lotan, and this is actually my first conversation or interview of 2026. I've been a little slow here on the content side at the start of the year. Well, at least on YouTube, I've been slow. On Substack, I've not been. David, how are you?
Yeah, very good, Robert. How are you?
Excellent. It's a pleasure to have you here. Kind of interesting. So I said Substack a second ago, and I published a piece on a presentation that Robert Friedland did in California a couple months ago at some sort of conference on energy safety, and it was him and his finest. Obviously, he was in full form there, giving people some shock therapy about the amount of metals that we need and that we have no credible strategy to actually procure. And it's gone viral in 48 hours. I've been blogging for over a decade. I've had a lot of posts that got pretty good traction, but this one is on a whole nother level. It must be timing. It must be some sort of thing that's on people's minds here in January 2026. What do you make of it? Did you read the article? And what do you make of what's going on with the U.S. and China?
Well, I followed Robert for a long time as a metals investor, and he certainly has the gift of taking hold of the future, sometimes the distant future, and grabbing it and pulling it forward and putting it in front of you like it's tomorrow. And I guess since the equity markets are forward-looking, that's good for Robert's equities. And I agree with him. I mean, I think that especially when it comes to metals and mining, since the problem takes 10 years to solve and 20 years if you're solving it by discovering, developing, and then building a mine, really the future is tomorrow, or the solving the future problems have to start yesterday. So I think, I haven't seen that particular post with the U.S. going into trade war with every country on Earth, and with every country therefore needing its own, in theory, needing its own secure supply lines. We have a much bigger metal problem than even was projected when we were imagining that everyone on Earth would be driving electric cars next year. It's a much bigger problem than that now. Everybody needs their own rare earth mines. Everybody needs their own copper mines. Everybody needs their own iron ore mines. If you take what is going on geopolitically today and extend it to its logical conclusion.
And by the way, what's going on today geopolitically is, I mean, I don't know if there's a word that fully describes it. I mean, it's shocking. I mean, it's, to say the least, it's shocking. The president appears to have only an accelerator button. He doesn't have a brake pedal. And he is willing to say anything. He's willing to say anything. I'm not sure he's willing to do anything, but he's certainly willing to threaten shocking things. Venezuela, look, doing an operation to arrest, capture, kill one man, I think that's a warm-up, and there's much bigger operations in the future. And the fact that he's now got Mexico in his crosshairs is deeply concerning to me, because I don't see the end game there. I don't get the strategy. I don't get the plan. And Venezuela is small potatoes. It's not a particularly important country on the world stage, but Mexico is a lot more important, and it's a lot closer.
Yeah, I think you can argue that by getting control of Venezuela, you've effectively replaced your strategic petroleum reserve. So Biden emptied that reserve in order to keep a lid on gasoline prices, as that particular presidency was trying not to perish due to inflation. And of course, inflation caused maybe 8 out of 10 incumbent governments to be put out of office over the last few years, and sadly not Canada, but it did seem to happen all across the Western world, that the COVID inflation, the inflation that started or had its roots in COVID, resulted in almost every incumbent government being put out of office. And so in an effort to prevent that from happening, Biden emptied out the strategic petroleum reserve. Refilling it would take a long time. And I guess you can argue that if somehow magically the United States is able to get in control of Venezuela's oil reserves as a result of this move, there's a strategic petroleum reserve sitting there. And even though it can't be accessed without billions of dollars of additional investment and some number of years to get it to a point where it can produce for the states a million barrels a day or two, you don't really need to do that immediately if all you really need to do is get in control of it and therefore have access to it if needed.
Yeah. I think it's very early days in Venezuela, and
yeah, I can't. These decapitations often result in a power vacuum and more likely a Syrian or Libyan style situation. And it isn't clear to me that Delcy Rodriguez will survive the wolves there. Maybe she will. I don't know, but it would be great for Trump if she turns out to be a pragmatist who's in control of the guns. But let's see.
You got a lot of young men, a lot of guns, and a lot of oil and money on the line. I don't see it ending well unless we're going to put, the U.S. Army on the ground there, which obviously,
Yeah.
I mean, which seems unthinkable, quite frankly. So yeah,
highly undesirable.
Highly undesirable.
Highly undesirable.
Look, so silver's been in the headlines just a little bit over the last few weeks.
Yeah.
I want to ask, what do you make of this move in silver? And more importantly, what do you make of the attention that silver is getting? And does that tell us anything about where we are in this cycle, either in the mining sector or in the juniors?
Well, depending on how you look at it, Bitcoin became gold and gold became silver and silver became non-fungible tokens or something like that. Some NFT of some kind, or gold stayed gold and Bitcoin became silver and silver became something else. And so that's one way to look at things. And I'm not suggesting it's the right way, but I struggled to wonder what would happen to silver with crypto being the super torquey replacement for fiat. And so now gold has emerged, as I thought it would, as the primary tool to hedge currencies and risk at scale for countries and central banks. I don't think crypto is able to replace it, and I think we talked about that in a previous interview. And crypto seems to have reached its equilibrium price. And I'm not talking about Bitcoin or Ethereum or the whole collected mess out there, Solana. I'm just looking at the whole group of the crypto group, not any individual constituent of it. Bitcoin is different than the rest, in my opinion, but crypto as a whole still absorbs a lot of flow and has growing institutional backing behind it. So let's say that crypto's reached equilibrium pricing as an amorphous mass, and now silver is unquestionably scarce, has industrial value, and has for 1,000 years, just like gold, served as a monetary metal. And so I guess it's not a surprise to me that now that there's a hunt for hard assets, that it too is benefiting. And that's possibly just a reflection of the fact that crypto as a mass has reached its equilibrium in supply and demand.
Is there
Possibly.
anything? Yeah, no, I get it. I mean, that makes sense. It's no accident that silver hit the accelerator as, you know, MicroStrategy and Bitcoin started to roll over. You know, that's no accident. There seemed to be a little bit of a capital rotation trade that took place there. You know, is there anything to be said? Like, so we saw silver break out above 50, above 55. Then platinum caught its move. Now we're seeing other metals break out, copper, and, you know, nickel now above $8 a pound all of a sudden. So it seems to be moving down the food chain. Is this just I mean, is this just pure speculation by, you know, hedge funds trying to make a trade, or is there actually, you know, physical buying of platinum that you know, like somebody stockpiling here?
I just think it's a flight to hard assets. I think there's a variety of factors at work here. The high multiple tech stocks in the United States, the infinite multiple tech stocks have I think reached a saturation point. I'm not sure. AI was the last blue sky frontier, and it's beginning to become fully priced. Maybe, I'm not sure. I'm not an expert there, but it's a trade that can't absorb all the money on Earth. It's absorbed a lot of it, and so the second biggest thematic next to the AI Cold War is the trade war. And again, you see the US reacting to China's rare earth embargo with deals like Mountain Pass, clearly moving in the direction of autarky, where everything needs to be supplied domestically. And with the ability to do it, because of course the United States is very mineral rich. They just have for decades now not wanted new mines. So I think we're in the early stages of the US headed in the direction of autarky, i.e. we're going to supply all the energy and all the metals we need, and we're not going to become vulnerable or dependent on others. And we consider the metals and energy in Venezuela ours, and probably in Mexico and maybe in Canada too. I don't know. And so where does that leave Europe? And where does that leave Japan? And where does that leave the rest of developing Asia? And I guess let's not forget about China, who've come a long way towards becoming independent when it comes to energy and food and other mineral needs, but isn't there yet. And so if that's the scenario you see, where everyone is competing with everyone again, and there are, you know, the trade integration that we had achieved, you know, by the end of Obama is now working in reverse, then again, that is incredibly commodity intense, that world, and incredibly inflationary. So not only do you need to get a hold of your own copper mines and your own nickel mines, your own phosphate mines and your own coal mines, but you probably just need hard assets that are a store of value. And certainly if you're a central bank, you need gold. So maybe that's not where we're going. If you take 2 points in time from the time that Trump got elected to his invocation of tariffs globally, to his operation, his decapitation operation in Venezuela, if you took all those points from election to tariffs to Venezuela, you would see a linear projection to a world that needs far more commodity investment than it currently has. And that's where we are. We don't have more data points at the moment.
So something that I have, you know, I guess something that's on my mind now, you know, at this stage of the bull market, we've had some terrific moves in 2025. I mean, I could go down the line, you know, look at Hecla, Forex in the last year. Look at IM Gold, even look at Barrick. You know, Barrick is a double since August, right? Like these are gigantic valuation jumps in these companies. I was doing a little valuation work over the last few days, and just like the big miners are not really where I see a whole lot of value here. I mean, if you look at Hecla, it's trading at a pretty stratospheric valuation here, and it doesn't have the production growth to really justify it, quite frankly. It's the go-to silver stock, right? It's the go-to silver miner in a small universe of silver miners, right? And you know, so without going into great detail there, you know, you get what I'm saying. The valuations are definitely getting fuller. You might even argue that they're fully valued, even if we use spot prices, right?
Yeah.
So what happens next in a bull market, David? And you know, the last, like, where is their value left here at this stage of the cycle? And is this the point where the big companies start to buy the smaller guys?
Yeah, I think the impediment to M&A when you're in bear market cycles is acquisitions with anything other than cash don't work, because generally the producers are trading at price to NAV ratios that prevent deals from being accretive. So they don't want to issue paper to take over little companies in tough times, because they struggle to get accretive math. So companies that are cash rich can do deals during bear markets, and companies that are daring and can convince their investors to reward them for taking a risk even on a deal that doesn't look accretive, can do deals like B2 did with Papillon and got Fekola, which Barrick should have gotten, and Bristow, you know, bristled about it and complained and said, you know, they'll never hold it, they'll never build it, but they did, and B2 was a rocket off the bottom from a 90-cent share price as a result of that. But now we're in the best market for M&A, where the supply of producers has been overwhelmed by the amount of money that wants to buy gold producers. So the market is paying for $4,500 gold right now. In fact, the market's probably paying for $6,000 gold right now in some stocks, and so any deal that a producer does, almost any deal, can be accretive. And this has been very quickly absorbed into the valuation of Skeena and Artemis and IAMGOLD, which are, at least in Canada, the late stage developers or the early stage producers, or in the case of IAMGOLD, the distressed producer with leverage to the gold price that is now enjoying that leverage. This has very quickly been absorbed in their valuations, and where it isn't is it isn't probably yet in Liberty Gold. It isn't probably yet in well, maybe it's not in Rupert. Maybe it's not in Aurion yet. Maybe it's not in well, it never got into Probe, but then Fresnillo bought it, and I think that they have been opportunistic. There are a few other development assets out there where I think you could argue that it's arriving. So Snowline, I think, is a $3 billion company now, even though it's going to be a long time before that gets into production, and probably quite complex from a permitting standpoint. You know, that's a beautiful discovery in a very remote place that the market is really, really paying for now. Montage, another example of, jurisdiction that investors are shied away from in West Africa, which is now a multi-billion-dollar company thanks to the participation of the Lundins and some of the ex-Endeavor people, Martino De Sico. So it's coming, but it's not there yet. And in theory, even these expensive development plays or early stage producers can be bought accretively because of the valuations that the producers are now trading at. So if you think Hecla's fully stretched, if you think Coeur d'Alene's fully stretched, if you think IAMGOLD is fully stretched, well, then they should be acquiring. And it's always in the interests of investment bankers and always in the interests of buy-side investors for M&A to happen, And now it's finally in the interests of the producing companies. So logically, what should happen is M&A, and M&A into an environment where there's not much on the shelf or there isn't much in the cupboard is going to have to go down to earlier and earlier stage companies, in theory.
In theory. So when you were saying that, a couple things crossed my mind. The first one was Snowline, because I think Snowline is very interesting. Those of us who know this sector too well, I would say that we know it too well, probably aren't the ones who have been long Snowline for the last 6 months, let's say, of this move, because of the fact that we know they're not going to be in production for 7, 8, 9 years, best case, just because of permitting and all the infrastructure that has to be built. And so, and I'll just speak for myself, like my mindset is, okay, let's use a rate of discount. 8% seems reasonable if you consider the permitting risk and the location risk. If they're not going to be pouring gold for 9 years, I can't get to the current valuation. I can't even get close to it, really. But I'm the one who's been wrong to not own Snowline for the last 6 months, right? So it seems like, Mr. Market in all of his wisdom has decided that these really big gold deposits, these gold deposits that are world-class, these great ore bodies, we can't value them with that 8% anymore. We can't even use 5%. We should just we should think of these as gold banks that are in the ground. I mean, that's kind of what the market's saying right now. Am I crazy to say that?
It's just merely a reflection of the PNAVs that the producers are trading at. And so the incentive to replace your reserves and the incentive to grow your production, not just maintain your production, but grow your production at these PNAVs is exceptionally high, and the supply of projects that can maintain your production level or grow your production level is very, very limited. And Snowline is going to be a very large gold mine. I think, is the PEA something like 500,000 ounces a year?
Yeah, they have a pretty good PEA that shows the first few years get up to around 500,000 ounces, and then it tails off a bit for the rest of the mine life to around 300,000 ounces per year.
Yeah, now that's an incredibly rare asset.
Yeah.
And the fact that it's in the Yukon with 50,000 people and in need of economic drivers and in need of a tax base and in need of infrastructure, which it's in the government's interest to build, not just to stimulate the economy, but to open up all these great mineral deposits to development, including fireweed zinc, including Casino, and of course Fuerte now. And you've got Pierre Lassonde investing there, who's very influential, not just in Canadian business, but in Canadian government. Snowline is a rare bird, and it's trading, despite the fact that I think it's 12 to 15 years for production. It's trading on its scarcity.
In a strange, leap of logic, Donald Trump being elected for a second term as president may have been the greatest thing that happened to the Canadian gold mining sector, and in particular, places like the Yukon, right? I mean, this is a perfect storm now, and Canada's got to get its act together, and it's got all this wealth sitting in the earth. It's time to, unleash it. Speaking of the Yukon is definitely a gold belt that is emerging. It had a fantastic year in 2025. There's been new discoveries there in the last decade. What other gold belts in the world have your attention? Is there anything on your mind where you've invested recently into a gold explorer?
Yeah, I'm I'm obviously heavily invested in Finland. I think everybody knows that, so we'll leave that aside. I think, well, let's not leave it aside. Let's just talk about the importance of a new jurisdiction like Finland now. I guess if you were really paranoid about the United States taking Canada over, you'd think that some of these producers are way too exposed to the Abitibi. I won't name them, but Finland looks like a really great diversifier, and it always has. It's a stable jurisdiction with transparent permitting, and it has great untapped potential. But if the Western Hemisphere is now becoming competitive and volatile, then European gold opportunities look great. So it makes me a pretty happy investor in Finland. And then when it comes to other places I'm willing to invest, well, of course, I'm still investing to some extent in Canada. Quite excited about Azimut's potential new discovery, all this VG that they announced in November, and I bought a little bit of that during tax loss selling season. What else did I buy during tax loss? Well, when it comes to gold companies, not too much. I went into this year quite well positioned, as you might imagine. But that was something that I added, and no recommendation there. But I found I'm a discovery investor, and early stages of discovery attract me. I think Mongolia is very interesting. I'm very happy for the success of the Erdene fellows there. I think they did an amazing job getting through a couple of really difficult bear markets and getting the Bayan Hundi deposit and area into production. And I think that's great geology, that belt. And again, it's an area that is underexploited, and probably an area where you can sell your mines to the Chinese. West Africa, still undervalued, still a conundrum for investors. Cote d'Ivoire, I think, has lots of potential. I'm very impressed with the job that Martino De Sico has done with Montage, and I think the Awale guys have something interesting there. I don't own the stock now, but I
was
think,
just about to ask you about Awale.
Yeah,
what do you think about that one? I mean, it seems like that's a great story, and it's not getting the full respect of the market.
Yeah, I think it's not clear what Newmont will do with that deal. Newmont is a changing company, and their emphasis on Africa obviously is in question at the moment. They sold one of the mines to Zijin, I think. Was it Akyem? But they kept one other gold mine there, and they still have some amazing. They've got an amazing VMS belt in Eritrea, in East Africa, and of course they've got this really interesting discovery with Awale in a deal that is pretty good for Awale, and I think good for Newmont. And of course, Awale has lots of ground around it. So I think that's, if you believe that Montage has been a proof of concept for Cote d'Ivoire, then I think you would own Awale. I don't, but I have friends who do. West Africa is something that I approach very gingerly, and it isn't a stock with a great network, but I think they've done well enough. Their cost of capital is low enough that they'll be able to take advantage of growing acceptance of Cote d'Ivoire. So again, not a recommendation, but I think worth a look for sure.
Going back to the Azimut story, because I actually bought that stock after the last news release with the VG.
Right.
That seemed like a good news release to me. And this is a quality company. I did a call with the management team, got a better handle on what's going on there, but it didn't really move the needle much in the market. I guess the market wants to see the assays. We've had plenty of companies talk about VG, and it doesn't necessarily always translate into great results in the assay tables. What's your take on that? Like, what's lacking from this company?
Well, it doesn't have a cornerstone investor like Trinity, for instance. I mean, if Pierre Lassonde owned that stock, I think it would trade for 3 or 4 times what it trades for now. And Jean-Marc has been very careful over the years in who he's taken onto the balance sheet, and in really being an under promise over deliver guy. And that doesn't actually work in this business. And I think that that's true of many people that I respect. But Jean-Marc has chosen not to run aggressive promotions, not to have, a really aggressive salesman associated with the business. His corp dev guy, Jonathan Rossett, is very understated, very liked and respected and trusted. But the market wants to get excited. And so when Jean-Marc made the Elmer discovery and hit some fabulous holes because he'd done a great job protecting the capital structure and is respected and trusted, the stock raced from 20, 30 cents up to over $2. And then it just turned out not to be big enough and not to be close enough to Eleanor to be marketable. But that's still a valuable discovery in my view. Unfortunately, the problems that assailed the company, which are, again, this under promise over deliver model, then collapsed and you had a sub 50-cent stock again. But he does great work. He has some great exploration alliances and deals. He's prudently moved forward 100% opportunities now, i.e. not spending too much money, but uncovering potential inexpensively. And so I think the one big issue, aside from the under promise over deliver model, which only needs a discovery in order to become valuable, and he may have one. The only other problem is there were lithium investors who were truly excited about the potential to sell this Galenay stuff to Winsome at quite a high value. And it was, I think, bitterly disappointing to investors who expected a good monetization there when it was sold to LIF for 2 million shares, 1.4% NSR, and some future money. And so, once before in the uranium boom of 06-07, Jean-Marc had a $9 stock and failed to raise any money. And so, in a way, didn't monetize that run. And now I think that there are some investors who think that he potentially missed the lithium boom as well and took a great property and sold it for peanuts just as that market was recovering. And I think they've been pressure on the stock. That's my deduction anyways. And again, didn't mean to turn this into an Azimut podcast, but I like them. I respect them. I think they do great work. And I think that they create value opportunities by not being great salesmen. And that's not a bad thing.
That's a good explanation. They create value opportunities by not being good promoters. So it's the, Wabamus project that caught my attention. You have gold with antimony as a nice potential kicker there.
Yeah.
So we'll see what the results are. Look, I'm a shareholder. I'm biased. I guess David is a shareholder. He's biased. We'll see what the results are.
Yeah.
But it caught my attention as being a good news release that the market didn't either understand or didn't care to understand. And maybe, you just explain why, David. Let's move to Finland. If you'll just, engage me for a moment here. We don't have to talk about Aurion, but just the jurisdiction, the country, gold mining there. I've noticed some new companies moving into Finland. There's some new deals out there, so things are getting more active. What's the latest there, and what's your take on the consolidation potentially of this gold belt?
Yeah, I think that's coming. Obviously, the situation between Rupert and Aurion was quite hostile. I think there was kind of a since decapitation strikes are in the news these days. I think the original plan to go in and buy B2 out and to trap us in confidentiality with the joint venture and keep it, trip our roper without tripping a press release, started the whole thing off on the very worst basis. And as a result, it's not been friendly between the companies, and there isn't an NDA between the companies. And so there's a lot of wide circling going on, and there'll negotiations, I think, probably resumed in December. I think Finland remains an undervalued opportunity when you, for instance, compare it to Skeena or to IM Gold or Artemis. And I think that's promising. And I think the pathways forward are becoming more obvious, and the hand of cards that Aurion has to play are pretty obvious. And that's probably why we added a new strategic in August. And so what I tell investors is you should be happy that we have more time to drill. Aurion has there's an imperative for a deal that's much stronger than the imperative between G2 Goldfields and G Mining. G2's discoveries will fit very nicely into a big camp, and another 400 to 500,000 ounce camp there. And there's a lot of industrial logic for that, but they don't have a layback that G Mining needs, and they don't have infrastructure ground that G Mining needs. What they have that Aurion doesn't have is a resource, but we're fixing that. And the more time we have to fix it, the more valuable perhaps the company can become. G2 trades for north of $400 Canadian an ounce. And Rupert trades for north of $300 an ounce. And I think that once people get comfortable that there are ounces on Orion's 100% owned ground, and Aurion holds this sort of strategic wedge, I think the company could be much more valuable. And if somebody wants to show up and make shareholders an offer to prevent all that value from being unlocked, we're always happy to talk. We'll be respectful to shareholders' interests. But as I said to one investor today, who tells me he believes the bull market has 2 to 3 years to run, and it's going to be crazy based on this sort of linear projection we have on Trump's policies. There's never been a more important time for the child to let the marshmallow sit on the table with the promise that if you don't eat the first marshmallow, there'll be more marshmallows later. And the metaphorical child, because I am nearly 60. So one of their junior companies make lots of mistakes. And one of the big mistakes that juniors make is they don't delay gratification. And principally that expresses itself by financing too early when you come out of bear markets. The minute the window opens and you can get 10-cent money or 20-cent money with a full warrant because it's been so hard to get money, you take it, and you forever despoil the capital structure as a result of that. We've never been a company that's made those kinds of mistakes. And I think that we're a company that has been careful and patient and disciplined in the decisions that we've made, and is capable of living in tension and delaying gratification, understanding that the market we were headed for was a market that would deliver a more competitive environment for the things that we have. And I think that's true. And I think that we are at this point now, as we discussed earlier, where the PNAVs of the producers are high, where the incentive to seek growth is high, where the penalty for failing to maintain production levels is termination. Even Mark Bristow couldn't escape that. So this is that place where deals happen, and every junior's job is to get to this market with something of interest and with as few shares outstanding as possible in a reasonably healthy treasury. And that's the way we run our business, and I think that's where we sit. And I think because we're in a reasonably good position in this camp, I think there are good outcomes, and I think good outcomes in this camp will be good for the other small companies in this camp. But obviously, this is the thing that everyone is waiting for.
Yes, I like what you just said there, because that is something that's been on my mind, the gratification. So many retail investors want the instant gratification, and their mindset is shared by many junior mining CEOs, quite frankly. And actually, in a bull market, you might actually want to hold off on that gratification just a little bit longer, or as long as you can possibly stand it. It's sort of like the concept of traders riding the trend. Don't take your 10% profit. In 2 months, you might have 100% profit, right? So the trend is your friend, not only in the stock market and charts, but also in being an investor in a company that has an appreciating metal in the earth, and a lot of it, right?
You can't ever make 10x if you sell every double.
Exactly. Yeah.
And it's much more difficult to make 10x if you sell half of every double. And I'm well aware of the dangers of riding positions for too long, but that's what makes investing hard. And especially for those of us who style ourselves as contrarians, you know, when you go from being contrarian to being consensus, then the job gets tough, because you need to ride your trades, despite the fact that you've gone from being against the herd to being part of the herd. And that's, you know, where you know, good discipline and technical analysis and being thoughtful and focused as you are, and with some of the tools you provide for investors, that's where all that comes into play.
Yeah, you really hit the nail on the head here, because there's a number of stories, I'll say, companies that are explorers that, you know, I've been frustrated at times as a shareholder the last couple of years with the way a drill program went, or why did they wait longer to test the anomaly, blah, 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 right? But I realize all perfect, you know, like everything happens when it's meant to happen. And actually in 2026, if they drill that hole, I'm thinking of like 5, you know, companies in my mind right now. It's not just one. If they drill that hole, you know, this year, it'll be way sweeter than if they had drilled it in 2023, 2024, 2025. So everything
That's
is
right. That's
meant
right.
to be. David, I want to ask you about Newmont and Barrick. This is a topic we've discussed before. It seems like things are heating up. It seemed like they were heating up in October, November, but then everybody went on vacation for the holiday. Is a deal going to happen here? And if a deal is not going to happen, what's the impediment to that? Because it seems to make sense from my perspective.
Well, the only reason that it wouldn't make sense is, I think, and I have a lot of respect for Mark Bristow, even though his own parsimony ultimately resulted in at least for now, the end of his career. Not believing that anything was valuable, believing that the gold price was $1,200 in the long term, really, I think, resulted in an ignominious end to what was otherwise a fantastic career. But he was always a vulture, and I mean that in a positive way. And perhaps the greatest deal he ever did was catching Newmont in this opportunistic moment where they were making a vanity bid for Goldcorp, and disrupting this to the point that it resulted in the creation of Nevada Gold Mines and Barrick running Nevada Gold Mines. So the thought to me that having really bagged Newmont on that they're now going to sell the company to Newmont, give it over to Newmont, I guess for the right price, that would be beautiful irony if they took some of Newmont's best assets and got control of them and then sold them back at a major premium. And maybe that's the epitaph that John Thornton wants, because he's not a miner, he's a banker, he's a transaction guy. And so maybe that's the end of his career in mining and on to his next life. But I think it's going to depend on that. It will 100% depend on leadership and on the optics, because they don't need to do anything. So this has to be all about looking smart for John Thornton, in my opinion. And I don't know what the smart deal looks like. I spent a lot of time on producers because I want to sell my junior companies to them. And I think that consolidation at the big company level has been incredibly hard on the junior markets. You know, what's exciting to me is Hemlo. What's exciting to me is Rio too. Imagine that company, which was maybe 10 cents a share on this Phoenix Gold project, which is now $3.50 a share in a $2 billion company, and buying copper mines at 2 or 3 times EBITDA in Peru, and now is another company that's going to need to acquire more mines. So while I think about Newmont and I think about Barrick and I thought about Goldcorp and I think about Agnico and Kinross, I don't want to see further consolidation. All that being said, it doesn't matter anymore because the middle of the market grew so quickly, and the number of middle market companies has increased. So we have the competition. We have the tension that we need, where these growing mid-tier producers will gobble up the good exploration assets, the good development assets, if the majors don't move fast enough. So, okay, maybe there should be one more big consolidation here, but frankly, I don't care. Let the government Department of Gold Production in the United States merge with the government Department of Gold Production in Africa. Fantastic.
Yeah, it seemed to me like the stumbling block was really on the details. The devil was in the details. It's one thing for them to pay whatever $40 billion for the NGM assets, be the 100% owner of NGM and 4 Mile, like as part of that transaction. But then what happens to the rest of Barrick's carcass, and Reko Diq, which they've obviously invested quite a bit in, that's a major pipeline asset for them. Who's going to buy that? Who wants to own a massive mining operation in Pakistan? And then all the African assets. I'm sure the complexity of the transaction is the real impediment to the transaction. It's not an easy deal to structure. And as you said, John Thornton needs to look brilliant for the deal to go through. So how do you structure it, and how do you make it so that he looks brilliant at the end of the day? It might be difficult for those worlds to meet.
And by the way, no imperative for it to happen.
Sure. At $25 Barrick share price, maybe there was some imperative for it to happen. But
Sure.
At this price, at 80 billion market cap in the US, they're sitting fine. Yeah, they're doing fine.
There was commercial logic to it once. There's industrial logic to it now, but there is no imperative now.
Yes. Yeah, 100%. Are there any US mining companies? So let's go to the US for a second. Are there any explorers or anybody in the US that has your attention? Are there any stocks that you like that are focused in the US, David?
Arizona Sonoran, I think, is it's the oxidized top of Ivanhoe Electric's deep porphyries, and I think that what Mother Nature tore apart will probably be reunited commercially at some point. And I think Ivanhoe Electric needs Arizona Sonoran. I have a great deal of esteem for George Ogilvy, and I think he's done an amazing job building value there. And I think there's lots more exploration upside there as well, although he's got the top of the system and Ivanhoe has the bottom of the system. I think West Point Gold, Derek McPherson's company, Arizona, is interesting, and I know that it's something that investors have had a look at. Trilogy was my pick for copper before Trump got in, and then went completely bananas. And I'm out of that story, but I thought that it was quite valuable. Generally, it's going to take some time to get mines built in the United States still, even though Donald Trump is pushing things forward and removing permitting barriers. It's still not something that investors in the United States find desirable. So it isn't a focus of mine. Faraday Copper, I think, is probably interesting because of the Lundin's involvement, and because in theory the US is going to need more domestic copper production. So I think that's an interesting one. And Hercules, I think that's interesting. I think that if they can progress it a little further, and assuming that all that ground they got from Barrick was as prospective as Barrick thought it was, I think that's one where they're going to need to improve their discoveries or make another discovery, but I think that that has the potential to be quite valuable. And of course, they're on patented ground, I think, or at least partially on patented ground. And so, that should be interesting. I think that Hecla probably should merge with America's Gold and Silver with USA. I think reuniting the Silver Valley would be a great way for Hecla and USA together to become more relevant in the space. But whether that can happen now or whether the prices work, I don't know. Those are just off the top of my head situations I've followed over the years. And of course, Darren Blasutti did a great deal with Paul Hewitt to bring him in to run the company. Darren took a bullet, and now America's Gold and Silver has gone, USA has gone completely bananas, primarily because it's got such a great silver asset. Minera Alamos, I think the Copperstone asset in Arizona is quite interesting, and the assets they picked up from Equinox are interesting, and it still trades only at probably 0.25 times NAV. So I think that's interesting. Again, I don't like to focus on the United States because I don't think they want mines. But
that's a pretty good list you just came up with.
Off the top of my head, I think those things are interesting.
Yeah, that's a pretty good. Yeah, and I agree with your comments with Hercules, and maybe the silver is the second discovery. They discovered the copper in 2023 by first focusing on the silver, and now their attention has been brought back to the silver. After trying to drill deeper for the copper. So maybe it's the silver that's the real the real icing on the cake.
I mean, all that metal there is interesting. Of course, Idaho is well known as the maybe the greatest silver district in the United States and one of the best silver districts in history. So, I mean, I think there's a lot of potential there, and obviously, discovery stories are hard. They wax and wane, they rise and fall. Chris has got a bull market now, and that should keep his cost of capital low enough for him to get an opportunity to make it big. But it's not something that I have followed other than from a distance and because friends of mine have owned it.
Very good. Final question, and I'll just kind of let you take this where you'd like to take it. Kind of a two-parter. What are you most excited about in 2026? And what would you give as simple advice to somebody who's new to the mining sector, an investor who has become attracted to the sector for obvious reasons, but they're still a newbie to the sector?
Well, it's harder than it looks. Enjoy it while it lasts. If you're sitting on trades because you were contrarian and you're disciplined, I think you need to be patient with those trades and understand there's going to be some volatility, but you probably caught a good long-term trend here. I'm excited to be as invested in Finland as I am. I think it's a dead obvious place for consolidation to happen, and it's still an undervalued camp because of some of the complications there. And I don't like to talk my own book, and I try not to talk about my own investments when we get together and talk. But to be honest, I'm excited about the coming year there, and so that's the honest answer. I guess I'm excited to be a met coal investor as well, and I'm excited to be invested in oil and in natural gas in the Dutch North Sea, which is another big exposure for me. And I think this is a period of time where we had these EV mandates, which drove a lot of investment in battery metals and in critical minerals. And while EV mandates are going away and perhaps the electric vehicle trade is subsiding, it's interesting that we transition into an entirely new and more urgent and larger narrative for critical minerals as a result of the disintegration of all these trading blocks in the last 2 years. And I think we as commodity investors maybe have gotten a bit lucky. And I don't want the world to be a more tense place, and I don't want more wars, and I don't want more conflict. So, but if you're investing to look after your family, and if you're thinking about how to preserve your savings, commodities, at least for the time being, are really an important place to invest.
David Lotan, thank you very much for your time again. This is a fantastic way to kick off the new year. Cheers.
Thanks so much, Robert.